What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So we're going to do a 2-video series today. First one, I'm going to explain to you, and I normally don't go over my IRA, but I'm going to explain to you why I have 2,000, and I'm looking at my IRA right now. It's a Fidelity. I have a total of 2,509.447 shares in one of my IRAs with SCHG. That's a total of $71,067.73. Again, 71,067 period 73. SCHG is not worthy to be in my traditional IRA. And I'm going to explain to you with my rationales why I have that amount of shares into my traditional IRA as compared to having SCHD not in my IRA. So SCHD is something that I may invest in for my dividend portfolio, because my dividend portfolio and my niche on YouTube focuses on passive income investing. But when it comes to an IRA, your goal is to increase your net worth. My philosophy is to be in line with the S&P 500 or beat the S&P 500 with a IRA. When you focus on dividend investing, you look at passive income, and I'm treating passive income as a retirement pension. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check out this analysis right now. All right, so we're going to do a 5-year analysis real quick. You're seeing in the aqua color right here, SCHG. It's up 142.05%, sitting at 2832. The S&P 500 in the past 5 years is up 83.70%. In the past 5 years, SCHD in the blue is only up 42.77%. Do not expect SCHD to beat the S&P 500. It's just not going to happen. We're going to look into SCHD and SCHG real quick. So it has a nice expense ratio of 0.04%. It's called a Schwab US Large Cap Growth ETF. The fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. So, a few things. Portfolio. Top holdings. Apple, 12.36%. NVIDIA, 11.37%. Microsoft, 10.43%. Amazon, 6.91%. Meta Platforms, 4.3%. Google, 3.71%. You got Broadcom, which I own, 3.63%. Tesla, 3.55%, Alphabet 3.04%, Eli Lilly 2.06%. So those are some of the top holdings in them. All right, so already, that's beating the S&P 500, doing well. It's growing extremely well. Now let's go to SCHD. So its expense ratio is 0.06%, and the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. So remember, it's for passive income. I don't see anything wrong with SCHD. In fact, I own Pfizer, which is 4.43%, AbbVie, which I own, 4.27%, Coca-Cola, which I own in my dividend portfolio, 4.18%, Cisco, 4.17%, BlackRock, 4.13%. We have Bristol Myers Squibb, 4.09%, Texas Instrument, 4%, Pepsi, which I own, 3.94%, Verizon, 3.97%, Lockheed Martin, 3.92%. So that's some of their top holdings. Still, I mean, for dividend stocks, I mean, the first three I have, Cisco's one I looked into actually. So, and Verizon's one that a lot of people that are income investors like using its dividends to reinvest into other dividend stocks or use that as passive income. So it's still not too bad. But you're going to see the growth now of if you invested $10,000 in it 10 years ago. So we're going to jump to that. So this is SCHG. If you invested $10,000 with reinvesting the dividends 10 years ago, you would be at $47,842.73. So I calculated the amount that I have, normally around $70,000, and I think I get $70 worth in dividends, which I'll go over the dividend history as well. But let's look at this. If you didn't reinvest your dividends, still, you'd be at $45,679.58. That's still pretty solid. And guess what? The total return without reinvesting the dividends is 356.70%. You reinvest, okay, right here, the total return is 378.51%. So again, I have a lot of money in them. So I'm not going to touch that until I hit my 50s for retirement. You're seeing why I like them in my IRA versus the dividend portfolio. Now I'm going to jump to my SCHD. So I had to stop for a second. I want to make sure I get the symbols right. I'm telling you, when you're trying to say these symbols, SCHD and SCHG, you get caught up. So you have to like slow down for a little bit. I'm telling you, try saying that 10 times fast and comparing it. So now we're looking at SCHD, reinvesting the dividends if you put $10,000 in. That's still a decent return. Okay, the total return is 190.32%. And then without reinvesting the dividends, you're at 25,954.23. So it's important to reinvest your dividends. Look at this, 29,031 versus 25,954. So, you know, if you have that in your portfolio, you better reinvest it. I mean, probably be a smart thing to do. But this is why I have it in separated, okay? And SCHD might be in my dividend portfolio in the future. It's a good deal, to be honest with you. I love the passive income. But you're seeing the difference between one and the other. Why I like is a traditional IRA, and I have a lot of money in SCHG in one of my traditional IRAs. So now we're going to go to the dividend history of both of them. I'm on stockanalysis.com, and here's the dividend. I'm pretty sure it's considering and adding into consideration the split. 2020 March, 14 cents, and then 2020, 20 cents. 2021, 16, 17, 19, 20. Then in 2022, 17, 23 cents, 21 cents, 23 cents, and 19 cents. And then in June 2023, 22 cents, 21, 24. Then in March, 20 cents. June 2024, 27 cents. Then 25 cents, 26 cents. So that is a considerable dividend increase from March 2020, which was 14 cents to 26 cents. So the dividend growth is actually 12.23%. That's pretty solid, and it's a quarterly dividend. So that's one thing that's very attractive as a dividend investor. Now let's look at SCHD. SCHG. I'll start in 2015, 1 cent, 2 cents, 1 cent, then 2 cents. I mean, you're not there. This is not for the dividend. So 2020, 2 cents, then 1 cent, then 1 cent, then 2 cents, and then 3 cents in December 2024. Its dividend growth is 14.57%. So, again, with a yield, you don't want to always chase yield. I'm an income investor, so I invest in high yield dividend stocks to do it for income. But when it comes to dividend growth, I'm like in the Broadcom, I'm in the really good ones as well. So, that's my goal is to get a lot of shares with the dividend growth stocks that have a little bit of a lower yield. I mean, that's why I like Visa. If you gave me an opportunity, if you said 400 shares in Arbor Realty Trust or 400 shares in Visa, I would tell you Visa right away. Its dividend growth would run circles around Arbor Realty Trust. So you have to have your own philosophy. And of course, I'm not giving financial advice, but you have to really look into what you're doing and have a philosophy and a strategy, a dividend investing strategy, an investing strategy with an IRA. You're going to be in line with the S&P 500. Are you going to invest in the S&P 500? Okay. I don't have the Yieldmax ETFs in there. I think that's a little risky for an IRA. So I like growth stocks. Okay. Good and decent dividend growth. Don't get me wrong. I mean, I still like that. But again, the long term is to increase my net worth. That's why I have the IRA separate from the dividend portfolio, and why my dividend investing channel is focused on my niche. I don't want to jump into other stuff. I like earning passive income way more than increasing my net worth, because I can tell you, having a retirement pension, you get nice raises, is better than having a good net worth to me. Obviously having a net worth of millions of dollars is great, but that passive income feels different for me than it does increasing my net worth. Will I be a millionaire in the future? Maybe. Do I really care? No, because I'm focused on the here and now in my dividend investing journey and strategy. I want to earn more in 1 year, and starting to do that as a way more than I did as an exercise specialist / exercise physiologist working in 2010 to 2012. I want to make more than that. That's my goal. Of course, I'm going to max out my IRA and build up SCHG. Fantastic. I just bought Google, and I'm going to be buying Amazon and one of my other IRAs, Nvidia and Apple. But again, I have certain goals. Of course, maxing out the IRA is great. Okay. But I'm just showing you again why I have SCHG over SCHD in my IRA, and I stand by that. I have over $70,000 of SCHG in one of my traditional IRAs. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I'm going to squeeze in a video for you after this. So take care and have a good one. And I'm going to jump to my disclaimer. As a reminder, this is a disclaimer. Do not use my YouTube channel for any form of financial advice. It's strictly for entertainment purposes only. Investing is a big risk. You can gain money, you can lose money. So be aware and do your due diligence. Don't use this my YouTube channel or any of my social media posts for financial advice or tax advice. Go see a financial advisor and go see a tax advisor. You can lose money, so you have to do your due diligence. So, I don't give financial advice, and that's just how I am. And I have to follow the rules. I'm not a financial advisor. So everything is strictly entertainment purposes only. And I am long in SCHG. Take care.